Thank you, Nico. Good morning, ladies and gentlemen. Not the easiest of tasks to follow the previous banking panel with the CEOs and the leading bankers in Greece, with a panel comprising mostly, or actually exclusively, international investment bankers. I think the purpose of this panel will be probably to continue the discussion regarding banking in Greece from the perspective of the international investor. I think an international investor looking from the out in to Greek banking has probably seen a few phases the last few years. The initial suffering of losses because of the PSI and the Greek government bonds, then a mounting stock of NPLs, both of which developments led to initial capitalization in 2013 with mostly public funds, then a second round of capitalization in 2014, mostly with increasingly with private funds. Then we saw, from the international investors' perspective, a dramatic first half of 2015, leading to a silent run on the banks and the imposition of capital controls, and then following that, a necessary recapitalization. It seems to me that all of these things are in the past. We have seen, and we've heard the speakers since earlier this morning, we are perhaps at an inflection point with increasing amounts of confidence returning to the Greek economy and the Greek banking system, and we're here with an incredibly well-qualified panel of experts to talk about the prospects of investments in Greek banking. We have Alex Pretzner, who co-heads FIG, Financial Institutions Group for Citi Group. We have George Triantafyllou, a director and country officer for Goldman Sachs, covering Greece. Stefanos Papapanagiotou, who definitely enjoys the privilege of covering both Southern Europe as well as the Nordic. Nice split if you can get it. And last but not least, Spyros Tsiloglou from Credit Suisse, a senior director. Alex, I think we'll start with you. I think from you, we want you to set the scene of the international environment and the European environment from banking and investment in banking. Obviously, as the Greek bankers have been busily fixing the banks the last few years, the international environment didn't stand still. Things happen globally. And we would like you, please, to illuminate us on, enlighten us on the international environment as it affects Greek banks.
Well, thank you. Can you hear me? Ah, good, perfect. Yeah, so I think we've seen in the last year a strong recovery of the European and the US banking sector, largely driven by anticipation of improving economic growth and as a beta play on the economy. I think we are now drawing conclusions here. What were the headwinds historically, and what are the headwinds today of the European banking sector? And I would say there's sort of generally three areas. One is asset quality that ties into capital adequacy. And here, I think, in the context of asset quality, clearly, there have been many steps taken, in particular in the periphery, to address the issues. But I think there is still, way to go when you look at some of the developments also with the new ECB NPL addendum and other regulatory steps. I think that leads to the second large topic for banks, which is regulation. I think here, in terms of regulatory trends, we have seen significantly more clarity in the last 12 months across Europe. That includes things like Basel IV, IFRS 9. I think we're still waiting for some more detail around MREL and what it means for capital securities. But generally, I think there's much more clarity around the regulation topic. I think there are some debate around whether there are significant shifts in goalposts sometimes from year to year, but generally I think we have seen more clarity in that topic. And I think the third headwind that we see generally, and the challenge for the banking sector, is really digitalization. Yeah, and I think here this is a trend that affects the banking sector across the globe, and it's not confined to, let's say, US, UK, or the Nordics. I think we see that definitely in Central Europe, and we see these trends in Greece as well. I think there are profound changes in customer behavior. The way how customers use banks, in particular retail customers, have changed already and is in process of changing dramatically. And this will have a fundamental impact in terms of how CapEx and investments will be determined over the next couple of years, because clearly there's been a shift away from the traditional bank branch network to digital channels, and generally the usage of the bank branches have been significantly reduced, and that is also the case in Greece when you look at the statistics. So this is a major area of change for the banking sector in general, and a major area of investment. So we see a refocus on technology spend, we see a refocus on making the operations more efficient, and this is a trend that is well underway, and we don't know yet who will be the ultimate winner, whether it will be the banks in a traditional way, or it will be technology companies who go into the banking sector and will compete with significant starting advantages in terms of customer databases and customer access. And I think these three trends, I think, are generally affecting the global banking sector, and I think they do affect also, at varying degrees, the Greek banking sector. And you know, when we look at where valuations have come so far, clearly I think the global and European banking valuations are sort of pricing in a strong recovery. I think there is still upside in some of the peripheral bank valuations, and clearly I think we'll get to that later in the panel.
Thank you very much. George, over to you. I think Alex did a good job at giving us the international drivers of investments in banking. We would like you to give us the Greek drivers, in the sense that the Greek economy is not the same as it used to be 10 years ago. It's a new environment. What are the key drivers in which the banks are finding themselves as they operate in the new Greek economy? If you were to put it simply, if you were the CEO of one of the banks and you were running your business plan, what would be the key assumptions that you'd put in that exercise as we're going into 2018?
Thank you, Apostolos. So you rightfully mentioned that Greek banks have gone through a number of crises, or a number of shocks through the years of the crisis, that have, to an extent, overwhelmed management's capability to steer those banks towards profitability, stability, normalization. While those shocks have actually been averted over the last couple of years, Greek banks are still facing significant legacy portfolio issues, as well as significant regulatory hurdles, which, to an extent, overshadow any silver lining that we can find in the macro side, as well as the bank's efforts to successfully complete their restructuring programs, as well as any marginal change in the operating environment. All of that being said, right, and to answer your question directly, if I was currently sitting here trying to project 2018, it's very hard to do so without actually thinking about stress tests, right? But, you know, we can be very brief on that point. Those tests are, by definition, going to be particularly sensitive to the parameters that are going to be used. We're talking about a system that has a very high concentration of NPEs. Therefore, it's a bit premature to discuss what may or may not be the result or the actions that banks may or may not have to take here. In terms of other factors, once you leave the stresses to the side, right, someone has to start from the top line. And on the top line, I think some of the trends that we saw in 2017 are due to continue in 2018 in the Greek banking market. We did see significant pressures on spreads. We did see deleveraging that have actually weighed on top-line growth. These are likely to continue. On the other hand, the benefits from funding cost reduction, cost of deposit reduction, ELA repayment, those are likely to probably cancel out any of the negative effects that I previously mentioned. So on the top-line side, probably, and as you forecast your PPI, you probably can feel fairly comfortable that you can arrive at a certain level that sort of makes sense. Therefore, any area of potential optimism or pessimism will be around basically your asset quality and the ability of the Greek banks to achieve the SSM targets while preserving capital. They need to reduce NPE exposure by 37 billion over 2 years. We've seen in 2017 efforts to achieve that at various degrees of success. There have been changes that have taken place and that hopefully will help accelerate that effort. But I truly believe that both CEOs and investors are going to focus on exactly that point.
Thank you very much, George. Stefane, having set the scene from an international and domestic economic perspective, we would be grateful if you did a deep dive into probably one of the most significant issues, which is the management of the non-performing loan portfolio. As we all know, policymakers, the SSM, the Bank of Greece, the government, the institutions, the banks themselves have spent a lot of time and effort working through the institutional framework and the legal framework so that we can see some meaningful resolution of the NPL problem. So, Stefane, for you and for your expertise, 3 very simple questions. Have the policymakers done enough to allow the banks deal with the issue? Are we going to see significant deals and transactions in 2018 that swiftly deal with the problem? And what, in your view, are the main factors that will define success and God forbid, failure of that exercise?
Thank you, Apostole. I'll start with your questions one by one. First of all, with respect to the policy, my view is that it is the policy changes and the framework that is currently valid for the resolution of the NPLs and the bankruptcy framework. I think it's an effective one. In fact, I think that if you compare it with with our European counterparts, it compares well, if not compares better. So I think that the policymakers have given the Greek banks the toolbox necessary to deal with the the restructuring of the NPEs, which effectively means number one, and we heard it from the previous esteemed panel, going after the strategic defaulters, which is a fundamental point in the effort of the Greek banks to resolve those NPEs and get value back. Deepening the restructuring efforts they do on particularly focused on SMEs and large corporates, whereby there is a viable business plan, and with some restructuring, some new equity, these companies can still can perform again and contribute to the Greek economy, and of course proceed with liquidations for those cases that it's not any more viable to retrieve any value. So all in all, you know, I'm very positive about the framework, and I think it's a catalyst, is one of the key catalysts that will, you know, lead to the further acceleration of the resolution of the NPLs. On your second point, and of course, which is related to the first, I see transactions. I expect more transactions to take place, of course. And, you know, we have seen a couple of transactions taking place. Very recently, a Greek bank, you know, had the de-risking transaction, an important one. You know, we see a lot of investor appetite and interest to look at these portfolios. Because, you know, there are investors who are experts at actually, you know, sort of, you know, dealing with the portfolios in an effective manner and a value-creating manner. So I see, you know, I see transactions. Let's not forget that the Greek banks have very strict targets set by the SSM that they need to abide by, and therefore, you know, I think if you put together the toolbox and the, you know, that they now have, the willingness of the Greek banks and the, you know, sort of the focus that they have in resolving these portfolios, as well as the investor appetite for these portfolios, of course, with the underlying, you know, strength that starting to show in the Greek economy, then I don't only, you know, foresee many transactions to take place, but also to answer the third question, I am very confident that you know, this effort, collective effort, will you know, perform well.
Thank you, Stefane. Spyro, last but not least of our panelists for the first round of questions, you have the privilege of being able to comment on any of the topics that have been raised, so feel free in your opening statement to comment, but I also have a very specific question for you. It's in my view, the twin problem of the NPL, which is liquidity. We all know that the ELA is going down, although not quite yet down to zero, and certainly deposits are coming back, but not quite yet to pre-crisis levels or even levels of 2014. In your commentary, we would really love to hear your views regarding whether we will see a return of normality in the liquidity position, and what do you think are the steps that are necessary for confidence to return to the banking system fully, and that the liquidity side of things is fully restored?
Perfect. Thank you, Apostolos. Maybe a couple of comments on what was discussed already. I think, firstly, we cannot generalize about the Greek banks. So we tend to treat them as a group because they come to market every now and then as a group to recapitalize themselves over the last few years. But investors are already differentiating across the four banks and expressing a view on valuation in terms of the share price and book value multiple where they're trading. And it's very clear that they look at two things: asset quality, both in terms of NPE coverage levels, but also gap to NPE reduction targets. And secondly, return on equity. So it's very clear investors pay attention. That's positive. It indicates that there's room for upside as banks conclude or advance their restructuring plans, as well as NPE reduction continues. So that's point number one. Point number two, there is a question of whether the high headline CET1 position of the Greek banks is something that investors are happy with or not. If you like, nearby Cyprus, we have the example of Bank of Cyprus, which recapitalized around the same time in 2014 and has spent time reducing NPLs but also consuming capital. So it today maintains a much lower CET1 position than the Greek banks, but still investors look at the credit very positively, They issued a Tier 2 transaction in early January. They have announced potentially coming to market with an 81 in the near future. On your point on liquidity, I would say there's four, if you like, sort of ways that liquidity position for the Greek banks has improved. Firstly, it's deleveraging. Secondly, there's some return of deposits. Thirdly, we've seen some funding from the capital markets from the Greek banks in the last few weeks through covered bond issuances. And finally, there's a much improved appetite towards Greek assets, and we're talking about repos on bilateral repos from international banks to finance the Greek banks. So secondly, we talked about sort of ELA in Eurosystem. It's actually interesting to note that back in June 2015, Greek banks were borrowing 125 billion from the Eurosystem, which they have now reduced to less than 40. And ELA has been reduced by 60 billion, over 60 billion in the same period. So definitely a major improvement there. In terms of targets for liquidity, I think we heard the leadership of the four banks point to immediate ELA exit for some and reduction to elimination within 2018 for most. So again, I think that points to a significant improvement. Now, in terms of tangible steps for the system to bring deposits back, we have seen depositors being very sensitive to political and economic sort of climate and appetite. I think any change to sort of capital controls will make less significant impact than sort of stability and sort of positive constructive sentiment across the market.
Thank you, Spyro. Alex, full circle, we have come back to you. Let's say that I'm a prospective equity investor in the Greek banking sector. I have spent a lot of time understanding the history, what all the structural reforms that have happened, the capitalizations and the recapitalizations, the changes of corporate governance, the changes in the bankruptcy laws, all of the things that everybody has been busy thinking about and implementing the last few years. But the key question for me as a prospective equity investor is, where's the equity upside? I mean, where do you think the value is going to come from as we return to some normality? What sectors, what products, what services, what actions by the banks to return some profit to the equity markets?
Sure, thank you. So, I mean, first of all, we haven't reached normality yet in terms of bank valuations in Greece, clearly. So when you look at where Greek banks are trading, there is significant upside to, even when you look at the European banking average in terms of price to book or any metric, quite frankly. But I think the real upside or the real question here comes from different sources. And I think I want to maybe step back and come back a little bit to what I said in the beginning. I think fundamentally, I think we see a massive change in the way how banking is being conducted. And I think banking is not that dissimilar from other industry sectors anymore, in a way that you have effectively a change in customer behavior. You have effectively a shift between technology and banking, how to serve the customers best. And so here in that context, I think we more and more have to take an industrial approach to banking, or the players that are realizing these trends are taking that approach. And that means shifting away from having large branch networks to much more cost-effective platforms. That means addressing where customers really want to bank or customers really want to interact with banks. And the use of the efficient use of technology, which I think is a significant driver that is not reflected anywhere, I think, in the bank valuations today, definitely of the Greek banks, because they're more legacy focused or not new business focused in terms of how investors look at today's balance sheets. And so I think the real question is, how is the credit demand in Greece, in particular in the SME sector, being met in the future? And I think the question is whether you will have similar trends like in the UK, where challenger banks have developed, and challenger banks either focused on consumer or focused on SME financing have been stepping into that role and haven't had sort of the burden of large legacy networks on the cost side with significant branch networks or legacy issues in terms of significant NPE exposures on their balance sheet, and effectively provide a new efficient way of banking at very different cost and return parameters than existing banks can. So I think the real question of banking is not so much how much recovery can be provided in the midterm, because I think we look at recovery levels here almost every year, and we see here changes, but it takes its time. I think the real question is, how does the bank of the future look like, and how are banks ready to address that? And I think, in particular in Greece, you have still significant branch networks that can be modified and restructured, and that provides a significant upside on the cost side, which I think people haven't really looked at.
Thank you, Alex. George, I want you to keep your bank CEO hat on and address more or less the same question. So if I ask you as a potential investor, where is the value going to come from, which sectors, which opportunities, will you dust off the old manuals of loans to shipping and tourism and fisheries, or are we going to draw up a new manual?
Well, I guess, we need to start from the basics. And I think that I agree with Alex on the fact that we haven't yet reached normalization. I think what investors want to hear from bank managements right now is that they will be in a position to build full confidence in the loan book and the balance sheet, with all the positive results that this will bring and all the upside that this will bring on the cost of funding and as well as on the liquidity side. Work can still be done on continuing to improve funding costs and also finishing the restructuring plans and improving operational costs. So I think that we're still in a large part of the work that banks need to continue doing in 2018 at least is very much focused in that direction. Now, of course, there is going to be upside associated with the core market that Greek banks are actually active in, right? And tourism has been a very important part of our sort of economic, or at least of the silver lining of economic growth that we have seen, right? So that there is going to definitely be opportunities in that space. There is an expectation of increased infrastructure spending and financing opportunities that this will bring. There is definitely an expectation that Greek banks will eventually start replenishing their loan book with healthy exposures. And there is going to be upside associated with that. But in reality, I think where everybody's focus is still right now is on the current playbook, if you want, which is basically restoring confidence, executing as well as possible on the cost side, and making sure that you position yourself for unexpected areas of competition, which can emerge through digitalization and other areas.
Thank you, George. Stefane, your thoughts as well on the same topic of opportunities for the Greek banks, and in addition to your thoughts on this issue, also a more specific question for you, Stefane, on competition that the Greek banks are facing from the capital markets. We have seen a lot of companies that are, if you like, the cream of the Greek corporate sector, refinancing Greek bank loans with international capital markets bonds. What can the Greek banks do to compete there and maintain some market share of the cream of the Greek corporate sector?
Thank you, Apostolos. If I can touch first on the question of the possible upside. The way I look at this is a simple way, actually. And, I mean, right now, what is the most important thing, that the factor that actually, every quarter, every year eats up the PPI, the profit of the Greek banks. That's the cost of risk. So in my mind, the opportunity lies in the normalization of the cost of risk. And why is that? You see that the construct of the market in Greece today with 4 systemic banks is very, constructive, conducive towards the banks making, a steady profit. And I don't want to sort of make, forecasts about how the GDP is going to evolve, etc. Clearly, it's on an improving path, and assuming it sort of stays there, you saw that sort of in the latest results of the banks, the net interest margin sort of marginally sort of increased. You saw an increase in the fees and ancillary sources of income for the banks, an increase in that type of income. And also you see the cost-to-income ratio reducing, improving constantly. And, there's also the Greek banks are forecasting sort of further improvements and targeting further improvements, which means that if they manage to normalize their cost of risk, then they should be in a position to, surprise positively on the upside. So I think that's an important point. It's a simple point, but I think that's how, at least in my view, I see in the short to medium term the opportunities. And of course, after that we can talk about the sort of the more structural aspects of the of the Greek banking system and whether they can sort of further rationalize their branch network and sort of further digitalize their platforms, etc., which all of that, of course, in a conducive economic environment should lead to even further improvements. Now, on the opportunities related to financing, clearly the international financial markets are there for the Greek corporates that can access them, and they're not going to go. There will be competition. The Greek corporates who can access the capital markets will access them because, of course, they need to diversify their funding sources, and that's what they should be doing. But I think as the environment improves, as the economy improves, as the banks, deal with their NPL portfolios and can focus on their main business, which is banking, then I think that they will become competitive as well and should be able to compete for this business of the Greek corporates.
Thank you, Stefane. Spyro, you've had the benefit of very interesting observations already. You made some very interesting observations. I think for you is the outlook question in terms of course, we know financial stability is very important. A strong financial system is essential before we see our country out of this crisis for good. What are, in your views, the most significant steps that all of policymakers and the banks and the key decision makers have to take as we go into 2018 to achieve this important financial stability in our system?
Thank you, Apostolos. I think we discussed about it extensively, the macro environment. Mr. Tsiloglou made some very good observations on taxation in the morning, but it's really very important to realize even if the Greek banks had a perfectly clean balance sheet and ample liquidity today, there is very little demand for credit because the environment is uncertain. So I think that's central. The second point, which might sound slightly controversial, is probably NPE reduction, the outright reduction, is secondary for 2 reasons, or rather, it's important for Greek banks to potentially reap any benefits or upside from those portfolios that they sat on for so long. The second point, however, is it's much more important to establish a correct mark-to-market on those portfolios, which is what the equity investors and debt investors in Greek banks have still not figured out. If you look at examples in nearby Italy, there's a transaction that was completed most recently by Banca Carige, which effectively they were able to, through a combination of sort of asset disposals, business disposals, some NPL portfolio sales, recap, and through equity and a liability management exercise, were able to raise $1 billion of new capital. I think the constraint of Greek banks on not having an accurate mark on those portfolios, or seemingly not having one, is what it needs to be sort of fixed as a matter of priority, which most likely will be as the first sort of NPE sales come to the market in coming quarters.
Thank you, Spyro. I would love to take one or two questions from the audience. We can do one. The gentleman over there.
I'm interested, you mentioned the digitization and this whole technology up. You mentioned that the banks are engaging in digitization and basically doing like information investment in the information aspect of banking. Is that an import, or you're working with domestic Greek companies? Thank you. What companies are consulting you or helping you do the information systems infrastructure that you're graduating to?
Is the question what vendors the Greek banks are working with? Is that, to be honest, I don't know. I assume that, you know, they use a combination, but I'm not entirely sure.
Take this. Who wants to take this?
I think it's a global trend, and I think it's interesting that I think the branch usage in Greece is, I think below 30% in terms of the customer base, which is showing that, you know, you have the same trend in Greece as you have in other markets as well. And we've seen from some of the comments of the Greek CEOs earlier that this is clearly a focus area as well for their future investment.
Well, thank you very much to our panelists. Let's give them a round of applause.